What is going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some of the data points, break it down what's moving it, and go over everything else that you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So Opendoor is pulling back down 3.42%, largely just with the broader market. 707 the high, 677 the low. So I did do a pre-market video on one of my other YouTube channels, and even though kind of the pre-market was starting to move higher, I did signal that it was most likely a bull trap. So you can kind of see the pre-market action. It had that nice push to 721, but again, it was very clear that it was just no more than just a bull trap. There's a lot of different moving parts that's kind of happening, so I'll give you a quick summary. But starting off with data, we did have ADP employment coming in at 11.7, so that's of course good, but generally we don't want good. We want somewhat negative. So that obviously didn't really come out as good as we would have ideally wanted. And then we did get CPI. So CPI month over month was a little bit hotter, came in at 0.3, forecast of 0.2, year over year 2.7 versus forecast of 2.6. Interestingly enough, you have Trump calling for rate cuts after strong US data. That's not necessarily what this is kind of showing and representing. So we have a lot of inconsistencies. We have also Trump going on quite the rant so far this morning about Powell, how he's crooked and how he's not doing a good job, blah, blah, blah. So unfortunately, you're having a lot of grayness. Market doesn't necessarily like gray. So this was going to be the big data to really push the broader market higher. If not, then unfortunately, this is what you are kind of getting, is a little bit more of a sell-off. And for those of you that are new to the channel, I always like to break it down where volume comes from and if it's actually justified the sell-off or whatever else. And so for instance, right now, these are all the transactions occurring on the secondary market above $100,000. Most of these, with the exception of this one right here, are sells. So institutions legitimately are selling based on this data right here. If we do a little bit more of a deeper dive though, looking at this at the month over month kind of viewpoint, energy did go up 0.3. So if you kind of cancel it all out, it does show that it was flat. So again, this is why it's important to not always pay attention to this data. Look at what's truly behind the scenes making this up. So CPI is not as bad as I feel like the market is really projecting, but as I've been signaling for like a week and a half, 2 weeks, the market is going to come to some realization and have a epiphany that, hey, we might not get a January cut. And right now, looks like is that day that we are all having the epiphany. So market's very slow to react, but obviously it is what it is. So it is fair to assume that a cut for the January 28th is off the table. And now we will be looking at March. And even in that case, we only have a 24.9% likelihood of a 25 basis point cut. So market's not really believing that. Similar to what happened yesterday, JPM came out, said that 2026, most likely we won't get any cuts. 2027, rather, we might actually have rate hikes. A lot of that clearly is because of CPI and so forth. So let me know your thoughts on that in the comments below. Aside from that, there really hasn't been that much in topics or speculative things being posted on Twitter. So Opendoor is at the mercy of the broader market and just kind of moving based on the data. So for those of you that tuned into my weekend video, you'd know that this whole week was more of a data driven week. So unfortunately, so far things aren't really going according to plan. Tomorrow we have PPI retail sales, also right over here existing home sales, and then we have the whole Trump court case, the ruling for that. So that should be a fun time. Nothing official from Opendoor either. So no press releases, no SEC filings, no analyst ratings. Shorts are returning 515,000 shares. So in my opinion, I see that as relatively optimistic. Because if they wanted and if they felt that today's sell-off was justified, they could easily double and triple down because there is a lot of available shares, more than 10 million. Probably there's some sketchiness happening behind the scenes because as of right now, there is about 75.69 million shares on loan, 111 being shorted. So some signs of naked shorting. This stock has had a lot, especially when it started to really heat up, a lot of FTDs. So that neon right here is all FTDs. So you can kind of see a good representation of that. It's been kind of quiet lately, but given the recent price action, it is fair to assume that we will be seeing a nice spike of that. which again would kind of match and jive with the whole naked shorting type of scenario that is playing out for Opendoor. 1.8 million in calls, 512 in puts, and then 51% of all the options being done are bearish in nature. From a bull standpoint, you see a consensus for it to be roughly around 8. So definitely good to see that the bulls are remaining optimistic. Bears are anticipating for it to be sub pretty much between 650 and 7, so where it is. So definitely a little bit more upside in my opinion, but frequency is more down. These are all the transactions occurring on the dark pool above $100,000. So the fact that shorts are somewhat active, it is fair to assume that most of this is linked to them. Right now with that 682, it is trading between this R1 and the pivot. So 641, which hasn't been touched, is going to be the next strong support. 723 is going to be the next strong target / resistance, which similarly wasn't really touched at all today. Moving back over here on the actual chart itself, it's currently breaking below this 50-day moving average, and generally that's a very big deal for a lot of growth and kind of speculative stocks. Again, if you kind of read the data behind the scenes, so we do have institutions selling, we have also shorts returning, so that's kind of optimistic. If you do truly look at the CPI data, it wasn't as bad as what the market is really portraying, so there might be a nice recovery tomorrow, possibly once the market comes to its realization, and assuming tomorrow's data comes in a little bit better than anticipated, then you could see a nice push higher. But nonetheless, we are currently breaking down a little bit. Stochastic RSI is very overbought, so whenever you see the first sign of weakness, whether it be specific to the company or on a macro standpoint, this is where you'll see a little bit more of a pull lower. Market position, you see some willing buyers, but it could go either way, of course, as I've mentioned. So let me know your general thoughts. There really hasn't been that much on a side note in articles either. So Opendoor, I think people are just waiting. As I mentioned in my video yesterday, I think Wall Street's treating it like an actual company now, not just a meme or cult or just a momentum play. It's being seen and trading like a true credible company. So I think that's kind of good. And so yeah, at the end of the day, we just have to kind of wait and see for most likely their upcoming earnings, which haven't been announced just yet, on how well this turnaround is truly coming. So let me know your viewpoint on Opendoor. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Definitely worthwhile to check that out. With all that, appreciate all of you watching.